Hey, what's up guys? It's Jonathan here, back with another public stock portfolio update. So as usual, we're going to do a quick recap of what happened in the market this week. Then we're going to do a recap on the public. We'll also do a recap of all the positions in this portfolio. Also, I'll give you guys a quick update on the AMC challenge. And we'll also discuss important things to watch out for next week. So if this video provides any value, please consider hitting the like and subscribe button. They both greatly help out the channel and help push this video out to as many people as possible. So let's get right into it. So to recap what happened in the market this week, the market started off pretty promising early Monday with a sharp run in the early hours, but those gains were quickly erased in the afternoon hours of trade-in. But we did have a slight recovery heading into the close. Then on Tuesday, we were down early in the day. This movement to the downside flattened out in the middle hours of the day, and we saw a small run into the close again. Then on Wednesday, we were down the first 30 minutes of trade-in, but we had a pretty good run for the rest of the day into the close. And then when it comes to Thursday, obviously the market was closed due to Thanksgiving Day. Happy Thanksgiving to all of you guys. And then on Friday, we had a half day in observance of Thanksgiving. There was a sharp decline in the market at open, mostly due to some of the news that came out that we'll discuss later on in the video. But this decline recovered somewhat later on into the day. And for the week, we're down about 2.25%. So to recap some of the moves we made in the public account, we did a lot of buying this week, and all the buying that we did were into new positions. So all the buying was done on Friday, and on Friday, the first thing we bought was Hut 8 Mining. Hut 8 is a Canadian cryptocurrency miner, and mostly they mine for Bitcoin and Ethereum. Recently, we've seen some softness in the crypto markets, and given how much correlation Hut 8's financials have to do with the price of cryptocurrency, I figured that investing in Hut 8 would be a good way to get some exposure to cryptos. One of the reasons why I like it a little bit better than just buying the coin directly, usually the correlation between Hut 8 and Bitcoin aren't necessarily one for one. Hut 8 actually tends to move a little bit more rapidly than Bitcoin. If Bitcoin falls 5%, we might see Hut 8 fall 8-10%. Or if we see Bitcoin run 5%, we might see Hut 8 run 10%. So that's some of the reason why I bought Hut 8 and not necessarily the crypto as well. Most likely this will be a trading position, so at some point I will sell out of this position. I don't plan on holding Hut 8 for the long term. Second position we opened on Friday was into NVIDIA, ticker symbol NVDA. We bought about $4 in NVIDIA at $318.72 a share. So I'm still doing research into this company, but for what I've read so far, I'm pretty happy with the company. In my opinion, I really want to make this company a really big portion of my portfolio. Because we've had a little dip in its price, I have started to build up my position into this company. But if we do start to see more softness, I will definitely look into buying more of this company. The third position we opened was actually into a cryptocurrency. And that crypto is Bitcoin. So we bought about $4 of Bitcoin at 55,514 cents a share. And this was just a simple buy to dip purchase. And again, this is something that I probably won't go heavy on right now. I think that if we were to see a more substantial dip into like the 40s, then I would start to buy it a lot more heavy. But I did decide to buy some this week, not only in this account, but also in my other accounts as well. Personally, I'm a much bigger fan of buying crypto in a brokerage where you actually own the coins itself. So for me, I'm definitely not going to use a platform like Public or Robinhood to buy my cryptos, at least until Robinhood comes out with wallets. I would opt for something more like a Coinbase or Gemini or something like that, where you can actually own the coins and you can stake them and earn interest on your crypto. So let's hop into the iPad and I'll show you guys how the portfolio is doing so far. So currently the portfolio is valued at $126.88. And overall, we're up about $6.81, or 5.68%. So we currently have $91.89 of stocks and $3.94 of crypto. And the crypto balance is from that one purchase of Bitcoin. And like I've said, we do still have some cash sitting on the sidelines, again, to buy these dips that we are seeing and to build out some portfolios. It's always good to have a little bit of cash just in case you see an opportunity. So the first position is N. It's been down a little bit recently, but it's still doing very well, especially given our cost basis of $155. So currently we're up 59.61% on this position. It makes up 21% of the portfolio. The next position we have here is Robinhood. And Robinhood right now is actually down 19.63%, which again, makes it a great opportunity to buy the dip on it. But I believe that there is a lockup agreement that's about to expire on Robinhood. So I probably will not be buying Robinhood until a week or two from now, as we may see more pain in this position. Currently, it makes up a little under 15% of the portfolio, and we're down about $4.50 on this. So the next position we have here is Tesla. Again, Tesla, like Enphase, doing really well. It's up 46.92% or $4.69, and makes up a little under 12% of the portfolio. Now with Tesla, if I was to buy more, I'd probably wait for it to dip a little bit more, maybe more into like the 900s, and then I may consider adding to it. But for the time being, I think I'm just gonna let this position rock and roll. The next position we have here is in Alphabet. Currently, it's basically flat at 6 cents, or it's up about 0.75%. Makes up about 6% of the portfolio. I'm not really interested in buying legacy tech like Google unless if we get a really good discount on it. I probably won't be buying too much of this in the near future as I try to look for better deals, but you definitely don't want to bet against a company like Google. Next position we have here is Amazon. Again, same thing, another legacy tech company. It currently makes up about 4% of the portfolio. We're up 1.37%. It's the same thing as Alphabet. If we do see a substantial decline in the stock, I will definitely be looking out on buying this. But for the time being, I probably will not be adding to this position. The next position we have here is Palantir. And currently Palantir makes up a little under 4% of the portfolio. And with Palantir, I'm not looking to buy the dip on this. I would probably want to dip a little bit more. But not only that, but I also want to do a little bit more homework on the company before I start buying more of it. The next position we have is in Disney. Disney is down 9.12%. And I think that's based off of some of the news that we got on Friday. I am definitely looking into buying the dip on this company if we do see more substantial sell-offs in the near future. So I'll watch out for that. Right now, currently, this makes up about 3.5% of the portfolio. Like I said, I'm more than happy to add to this position. So the next one is our new position in NVIDIA. We're currently down about 1.1% on it, and it makes up about 3% of our portfolio. Like I said earlier, I definitely want to do more homework on this, and I may consider to add on to this position pretty significantly if we start to see some really big dips in the stock's price. So then the next position we have is our cryptocurrency position into Bitcoin. It's currently down 1.5%. Yeah, Bitcoin trades 24/7, so this number is just going to be changing all the time. It currently makes up about 3% of our portfolio. Again, something I am considering adding to if we do start to see more pain and we see this dip into the 40s. Next position we have here is Redfin. And Redfin right now is down about 15%. This makes complete sense. We have a couple expectations for real estate. One of them is that the market in the future in 2022 and beyond is not going to be as red hot as it was in 2021 and the back end of 2020. So that is some of the reason why we're seeing such a sell-off in Redfin. Another reason why we're seeing such a sell-off as well is the concern of interest rates. We are expecting interest rates to start moving up even before the Federal Reserve starts to talk about rate increases. So because of that, we are seeing some massive sell-offs in any real estate related stocks. So this could be Redfin, this could be United Wholesale Mortgage, this could be Rocket, this could be Zillow. All those different real estate related stocks are having huge sell-offs right now. In my opinion, I think that it's starting to become oversold. I would keep an eye out for adding on to this position. The next position we have here is Hut 8 Mining. Is currently down about 0.75% right now. It makes up about 1.5% of the portfolio. Again, this is probably something I'm going to end up trading out of at some point. But for now, we're going to hold on to this until we start to see Bitcoin move to the upside. A quick update on the AMC challenge. We bought 4 shares of AMC at $37 a share. And currently AMC is at $37.58. So we're up about 1.5%, $2.32. And I am planning on holding on to this position till at least the end of the year. Some things to watch out for in the near future. When it comes to Congress, one of the things we want to watch out for is the budget talks, or if you want to be technical, the FY22 appropriations bill. Currently is being overshadowed by a social infrastructure bill and the talks there. But I don't think the social infrastructure bill will have much effect to the market. I really think that the budget has a lot bigger of a possible negative effect if Congress doesn't figure it out. Normally, government shutdowns don't necessarily affect the market too much. I think if we were to see a government shutdown during this time, given how fragile the market is right now, so I think it could really make a good buy to dip opportunity. So I would watch out to see kind of how this progresses. I believe right now they're currently talking about establishing another continuing resolution. Just to remind you, I believe the current continuing resolution that we are running off of ends this coming Friday, which is, I believe, December 3rd. So they are considering maybe making one that's 2 weeks long. There has been some talks about making a continuing resolution that's 3 months long. We'll have to see how that goes and how the negotiations of the actual budget will take place. So since we're on the topic of government, we might as well talk about the other catalyst that may affect the market, which is the debt ceiling. Again, I think this is something that's been overshadowed because of the social infrastructure bill, or Build Back Better Act. The debt ceiling is something that I think is even more important than the budget. I believe right now, currently, Janet Yellen is saying that the government will run out of the ability to borrow money on December 15th. Congress has about maybe 17 to 20 days to kind of get their act together and get this passed. And like I said, I think that this is a much more important thing than the budget, because this can have some really bad ramifications to the stock market. It seems like the leaders in the Senate, Mitch McConnell and Chuck Schumer, are in talks to come up with some plan to extend the debt ceiling. So that is something that you do want to watch out for. When it comes to the Fed chair position, Biden did announce that Jay Powell will continue his tenure as the Federal Reserve chair. That takes a lot of near-term risk off the market. And it was something that was pretty much expected, so there's no really upside to it either. It was just kind of like business as usual. When it comes to inflation and interest rates, what I talked about last week is pretty much the same way I feel about it now. And it's very detailed. If you want to know about it, I would encourage you to check out my video from last week. So since we just talked about inflation, interest rates, supply chains, and all that, we might as well talk about the root of all evil, which is COVID. So on Friday, we got some news of a new COVID variant. And this variant is called Omicron. And this variant of COVID is significant because it has proved to be more transmissible compared to other variants that we've had. It has also proven to be very transmissive, even among vaccinated people as well. But the lethality of this variant has yet to be determined. And with this news coming out early Friday, we did see the stock market react to it pretty significantly. We saw normal COVID risk-on reaction happen. So the travel and restaurant stocks sold off, and the tech and in-home stocks did well. So, for example, the travel stocks are like Cheesecake Factory, Delta, Carnival Cruise Lines, those kind of companies did really poorly on Friday. But then the companies like stay at home, so things like Zoom or DocuSign did very well. This news, depending on how it progresses and what we learn more about this variant, can really create a good buy to dip opportunity on travel stocks. Whether you're looking to swing trade it or you want to hold them for the long term, that this could be a really good time to get in. But a really big downside to this variant is the kind of disruptions it'll cause with the supply chain crisis that we currently already have. What we've noticed with China and COVID is that they tend to be very strict on COVID regulations. We've heard stories in China where one person got sick at a port and they closed the whole port down. And because of this, it could really make the supply chains much more worse than they already are. So whatever shortage there is right now, whether it's a semiconductor shortage or a shortage in this, shortage in that, we may see those shortages become even worse. So it's just something good to know. So on Thanksgiving, while we're all enjoying our Thanksgiving dinner, news came out from China stating that the Chinese government has requested that Didi is a lot like the Uber and Lyft of China, that they delist off of the New York Stock Exchange due to security concerns. And initially, many people thought that this was going to be disastrous for all Chinese-related stocks. Because if the Chinese government wants Didi to dislist, what's next? Could it be NIO? Could it be Alibaba? Can it be Tencent? Nobody knows. And there was a lot of fear that there was going to be massive sell-offs in Chinese stocks. But when the market opened on Friday, we actually didn't see that kind of reaction. We saw a substantial sell down initially in the pre-market hours, but a good chunk of that sell-off was bought up by the dippers. So I know for me, I hold about 2% of my portfolio in Chinese stock. I've sold off some of it since that news came out on Friday, but I still hold a majority of my Chinese stocks. It's such a small portion of my portfolio that I personally don't see the reason to even sell it. I'm probably just gonna diamond hands it and hope for the best. Hope that the Chinese government chills out and doesn't do that. But we'll see what happens. If we do see the Chinese government start to push harder on Chinese companies to delist off the New York Stock Exchange, that may be really bad for those stocks. So that's just something good to keep in mind if you are investing in Chinese stocks. So that's all I got for you guys this week. Thank you so much for watching. As always, please like, share, and subscribe. It all greatly helps. As always, check me out on all my social medias. I try to post there as often as possible. And let me know what you guys think in the comment section down below. Until next time, peace.